Good morning, everybody. I'd like to thank everybody for joining us for this morning's webinar. We certainly have a lot to get through today. We have a packed schedule, so we could just jump right into things here. For anyone new to our webinar series, my name is Jason Flynn, and I am the Director of Human Resources and Client Services here for Prestige PEO. Joining us this morning again is our founder and CEO of Prestige PEO, and that would be Andrew Lubash. And it's also great to have back with us again this morning our controller and, of course, our tax extraordinaire, Carol Sawyer. So it's nice to have everybody back together for the webinar this morning as we take you through a number of different topics here. So let's get into today's agenda and what we have on the docket for everybody here today. Really is, as you can see here, a short agenda with only 3 items on the list, but we have packed a lot into these 3 topics. So plenty to go around here this morning. First, we're going to get into the issue of unemployment insurance fraud, as I'm sure many of you have read about in the news or even experienced with yourself or potentially with any of your employees. There's definitely been a surge of fraud around unemployment insurance and claims that have come about really across the nation. We're going to take a review on what that fraud is, what it means for you and your employees, and what we can do to help protect our information, really a how-to from the employer and the employee perspective. We've also gotten a lot of questions around the employer retention tax credit and really what that means to employers as we've moved out of the year 2020 and into a brand new year, and what those rules really look like going into 2021 now that we are firmly implanted in the 2nd month of the year already. And of course, what would a webinar be without talking about the Paycheck Protection Program? This is another area that's brought a lot of questions to us from clients and businesses alike. And Carol has graciously joined us today to take on those 2 topics and bring some information to everybody on the call today. Before we get started, I know that Andrew Lubash, our CEO, wanted to hop on and say a few words, which I'll introduce him in just a moment. But before I do, just as a quick reminder, and this should be normal for you if you've attended these webinars, but all participants will be muted throughout the webinar. However, if you do have a question, I urge you to use the Q&A feature within the webinar and direct those questions to the panelists. Of course, we're going to do everything we can and our best to answer all of the incoming questions, and following the webinar, a recording of the webinar along with a copy of the presentation will be posted to our website. This can be found under the sections of the Prestige PEO website called the Prestige Prospective and the COVID-19 sections. So with that, I would like to introduce our CEO, Andrew Lubash, to say a few words before we get going.
Attend these webinars, and again, we hope you find them to be very informative. And again, questions, as always, we encourage them. Sometimes we learn answers by you asking questions. So again, please make sure that you do. And again, at each webinar, I always make sure I reiterate my contact information. I am available for any questions. My email address is alubash, L-U-B-A-S-H, A-L-U-B-A-S-H, @prestigeemployee.com. My direct line in the office is 917-258-0223. And even my cell number, if you do require it, is area code 516-680-5021. So again, these 3 topics are only the beginning. As a lot of you have read in the media or seen and heard in the media, obviously there's going to be another stimulus package coming. At Prestige PEO, we've already received quite a bit of the language of what's coming. I was reading a few hundred pages last night. Exciting, huh? And again, it's going to touch all areas of our business lives. It's going to touch everything from COBRA to our 401k retirement plans, our benefit programs, and obviously our labor laws and new different programs that are going to be designed to stimulate the economy. So you can expect some webinars to come, shortly after this as well, keeping you up to date. The first item that we're talking about today, I have received phone calls from people, friends of mine that own businesses that are not, related in any way to Prestige, that always call and ask me, what do you guys, how do you do this? I'm like, become a Prestige client, and I'll tell you. But anyway, I don't do that, I answer. But it seems like unemployment insurance fraud is at an all-time high, and it doesn't matter what business, who you're with. Claims are being filed in employees' names without them actually filing for unemployment or being unemployed. Again, it seems to be all online. Again, I've seen it across all different industries. Like I said, mostly non-Prestige clients that are calling and asking me what you do. The one bit of feedback that I do get, and Prestige clients that do experience this, we're here to assist you, is that when you call New York State as an example, or New Jersey, or the Carolinas, California, we've also, I've heard from some people, is that you call the number on the form, it refers you to another phone number, that refers you to another phone number, that refers you to another phone number, okay? And it becomes like this giant shell game, and you can never seem to get a person on the line. So again, if this seems to happen, again, for any of the Prestige clients right now, anyone on the phone, obviously we're here to help you and guide you. Non-Prestige clients, again, we're always here to help and guide as well. We'll never turn anybody away. The employee retention tax credit, the ERTC, and the PPP loan have also been a major topic of discussion because there are funds and monies out there for you, okay? And again, a lot of questions come in, or a friend of mine, a really close friend of mine that owns a business, was asking me, even about PPP, he never applied. He just didn't know how to. So again, Carol and Jason and our team are here to assist you, walk you through the different legislation, how to complete the applications, what's required, what's reports, what's the differences between the programs. And again, even if, again, it can be overwhelming, even on a webinar that's designed to be extremely detailed and cadenced, that you can take notes and understand it. And again, as we always do, we post the webinar on our website afterwards, so you can, review the verbiage, and you could also look at the slides. We're here to help. I mean, that's what we're here for. So again, people always, I always get, well, I didn't want to ask a stupid question. The stupid question is the one people don't ask, okay, because, you're thinking it, and so are 45 other people on the call. So if you want to answer, we can get those as well. So before I decide and take the whole amount of time talking, I'm going to turn it back over to Jason and Carol. Again, my contact information, alubash@prestigepeo.com. My direct extension, 917-258-0223, and my cell, 516-680-5021. I wish everybody, a great 2021. Everyone stay well, stay safe. Jason?
Thank you, Andy. Thank you. It's always nice to have Andy hop on the line and say a few words here. Really, his extensive experience within the PEO industry and with leadership positions on NAPIO, really help to guide the success of this organization. So having him come on and talk about some of the things that he runs into and the things that we do as a PEO is always valuable. So thank you, Andy. And, with that, I'm going to dive right into unemployment insurance fraud, and Andy was dead on accurate. This is something that has really kind of exploded and created a lot of issues, right? This really touches on a lot of hot topics right now. Unemployment insurance fraud is this topic that really seems to really wanted to join the unpleasantries of being a part of the global pandemic, right? Fraud said, you're not going to leave me out of 2020 as we get through this pandemic. So what we've been seeing over the past couple of months, this topic has really come to the forefront of the COVID pandemic issues. So with that, we decided to add it to this week's webinar so that we could help employers prepare for this issue, educate on what to do for themselves and their employees. Now, talking about, unemployment is certainly, old news at this point on these webinars, right? We've certainly covered this topic at times over the past year during our weekly webinars, but the reality is that it's a very unwelcome result of the COVID-19 pandemic. and it's directly related to an unprecedented increase in the number of unemployment claims across the country. And as you can might imagine, it's an easy target for these fraudsters or these criminals to take advantage of times like this. With unemployment claims being at record highs, it makes it an easy time to take advantage of the situation. It's really the perfect storm. So what we've seen throughout the country, and again, we speak and deal with clients in nearly every single state here in the U.S., but even beyond that, the reports that have come out, states are reporting an unusual uptick in the receipt of fraudulent unemployment benefits forms or notices for claims for unemployment benefits. And the kicker here is that many of them are implicating senior level management and employees who also remain employed. So there is also a very specific target that we're seeing as well. Now, nothing comes without a price, right? The enactment of the CARES Act itself, a good thing, something that was designed to help businesses, to help employers and employees. But what it also did is open us up to this new type of unemployment fraud that has plagued the state's unemployment systems. So what I mean by that, the CARES Act made very lucrative federal funds available to individuals unemployed due to the pandemic. And what I'm talking about is the pandemic unemployment assistance, that $600 extra per week on top of the unemployment benefits that they're already getting. It injected a lot of monetary funds and benefits into the country. Right. In addition to that, many states have also lifted some or all of these standard qualifications, such as, these things we're talking about, like the job search requirement or the 1-week paid waiting period. So what this all has done, the substantial increase in funds available out there right now, along with the relaxed rules around the checks and balances for unemployment, has created this perfect storm where unemployment programs have become prime targets for fraud. So let's talk a little bit about what unemployment insurance fraud actually is, right? So we're going into these slides. It's important to know exactly what it is. And it can really be broken down into 3 different areas. We have employer fraud, claimant fraud, and identity theft. Now, employer fraud is situations that can include certain actions to avoid tax liability or establishing fake employer accounts to enable fraudulent claims against that account. That's not really what we're seeing right now. But then we have claimant fraud, right? And that involves employees knowingly submitting false information, trying to collect benefits when they're not eligible, or not being ready and able to work when they should, or intentionally not reporting wages or income while collecting full benefits. That's out there, but again, not the biggest thing that we're seeing. Then we get down to identity theft. And you can imagine, if the other 2 aren't quite prevalent, identity theft probably is going to be. Identity theft may result in unemployment insurance fraud that is not the fault of the employer or the fault of the victim, the employee that has been, victimized. So that's where the greatest concern is right now. As it relates to unemployment, the growing number of fraudulent claims is a direct result of an increase in identity theft. And that's what we are seeing. Hand over fist, that's what we're seeing, not just here at Prestige, but out there in the country from different agencies, such as, the U.S. DOL, Department of Labor, the FBI, the Secret Service, state agencies, and I'll get into that a little bit more. All it takes for a criminal or an identity thief, as they call them, to gain a person's name, social security number, or the name of their employer, And these are all things that can be obtained from a number of different sources, right? We have the dark web, we have social media platforms, business directories, websites such as LinkedIn. All they need to do is collect that short amount of information, and they're off and running. They have what they need. But I'm going to get into identity theft a little bit more in a couple of slides, but it's an important part to start off on because this is kind of the trickle-down effect of what you're going to see. Now, what are the penalties for unemployment insurance fraud? All states, from a federal level, all states are required to assess a penalty to this fraud. Now, the penalty should be at least 15% of the amount of the fraudulent payment. So there are guidelines from a federal level on what states should do, and there are other penalties that could be attached to this, right? This could include some things like criminal prosecution, of course, with fines, incarceration, obviously the repayment of stolen funds. It can even make people ineligible for future unemployment compensation. So there are rules around that. However, according to the U.S. Department of Labor, states are required and expected to enforce their own unemployment insurance laws. So it is up to the states by state to enforce these laws with a little bit of guidance from the federal government. So let's move on to the next slide. And I wanted to give everybody an example just by looking at one state. And we're going to take a look at New York and some of the staggering numbers it offers. And I have to be honest, it almost made me fall off my chair when we were reviewing these things as well. And I think you'll understand why as we get into this, right? So since the beginning of the pandemic, which the state uses March of last year, of 2020, as that mark for the start of the pandemic and unemployment, which makes sense. The New York State Department of Labor has paid over $65 billion in unemployment benefits to more than 4 million New Yorkers. Right? So $65 billion, that's a large number. I truly in the past had no idea, what the total number was that New York paid out, until we put it in perspective and understand that $65 billion represents more than 30 years of unemployment benefits paid in the past 11 months. And that's kind of a fall off your chair moment, and that's just one state. Now, all of this data is according to New York State as of February 2nd, so it's extremely recent. And in that February 2nd notice, the New York State Department of Labor announced that it had identified more than 425,000 fraudulent unemployment benefit claims during the COVID pandemic. And this prevented the criminals, the fraudsters, from stealing more than $5.5 billion in benefits. So if you want to gain an understanding on why it's extremely challenging to reach anybody at the Department of Labor Unemployment Division, this would be a good reason why. It's not enough that they're spending all of their time in the massive increase in the amount of claims that they need to submit, but now they have to pour an insane amount of effort into catching the bad guys. And it has made it challenging, and unfortunately the people that suffer are the people that need it. Now, how is all of this happening? What the state of New York has identified is that the criminals are using the identities of real New York people. The personal data was probably or likely stolen during previous data breaches involving institutions like banks, insurance companies, some major employers. And the data was used to file fraudulent claims and illegally collect benefits in the same name of the individuals who are not unemployed. All of this has pushed the state, it has pushed the federal government to launch campaigns directed to specifically educating New Yorkers and employees of other states on how to protect themselves against identity theft. Right? So keep in mind, this is one state, and there are other states that have massive problems with insurance fraud as well. So let's move on to, kind of taking a look at it from a state-to-state perspective. So which states are affected by unemployment fraud, right? This is kind of a silly question because the reality is that all states right now are experiencing spikes in unemployment fraud. You know, while the initial spike of unemployment fraud occurred in the state of Washington, probably made sense because that's where our first cases did come in from COVID. But just like Washington State and other states such as California, Michigan, Massachusetts, and Florida, and obviously New York as well, you know, have all seen very large increases in unemployment fraud. So a couple of bullet points here I wanted to take everybody through. Let's take Michigan, for example, right? In an effort to prevent potential fraud in Michigan, the state sent a quote-unquote stop payment notice to 340,000 active accounts. Right? The state after that was able to validate around 140,000 legitimate accounts of that 340,000 and resumed benefits within days of that. But that's an awful lot of people who had to wait on benefits until the state was able to validate those accounts, on top of the massive amount of fraud that they need to now address. Then we have the state of Washington, where $655 million in unemployment fraud claims were actually paid out. And as of now, they've only recovered $334 million. So again, on top of the massive amount of time it takes to go through this, that's an awful lot of money that's being lost. And finally, data has also shown that unemployment fraud could cost Ohioans or Ohio people $460 million this year. The amount of money that's being lost because of this is a staggering amount, and it should be known to keep people vigilant on this issue. Now, as you can see here on the other side of the screen, there's a great picture of the United States broken down state by state, color-coded, showing the improper payment rate as it pertains to fraudulent unemployment claims. Now, the Payment Integrity Information Act, which is a federal program, does require state programs to report an annual improper payment rate that is below 10%, right? That is a national requirement. Your improper payment rate needs to be below 10%. And if you look at this screen, you see a lot of green, right? That seems pretty good. Green we usually indicate with a positive thing. And yes and no, I guess we could say. All of the green states indicate an improper payment rate less than 10%. So that's good. They're within those regulations, but it doesn't really tell the whole story because it doesn't mean that they weren't lower than that. As we mentioned earlier, all states are seeing a spike. So naturally, we have orange and red states that are way out of their depth in terms of the improper payment rate, but everything else is green, is still heightened as well. So just something to keep in mind, and we wanted to show the distinction from a state-to-state basis. So now let's get back to identity theft, and I think this is a really, really important part of this conversation. You know, identity theft, as we discussed earlier, you know, the type of employment fraud that we're experiencing right now, for the most part, is where unemployment claims are being filed under someone's name, but that person did not apply for unemployment benefits. Employers, I mean, companies and employers are receiving notices like monetary determination letters, which is really just a fancy way of saying, you know, unemployment claim. But they're receiving these claims, these letters, the determination letters from the Department of Labor for unsuspecting, actively working employees who did not submit those claims themselves. These employees are victims of fraud, but they're also a victim of identity theft. And it's the identity theft that caused the fraud, right? Like these two go hand in hand. You almost can't have one without the other. So what is it? Let's talk a little bit about what identity theft is. Identity theft occurs when someone uses another person's personal identifying information, otherwise known as PII, and it's something that you'll see not just on this slide, but throughout, you know, the rest of the discussion here around unemployment fraud. But someone that uses another person's PII, like their name, an identifying number, or a credit card number, without their permission to commit that fraud or other crimes. Now, identity theft was a term that was coined in the 1960s, but let's be honest, identity theft has only become more and more prevalent more recently as technology has advanced. So it's something that we hear more and more often. It's something that we should be training on more and more often. Now, as I was saying, just like I was saying, it is more common these days, and it's more common than you might think, and it can come in a lot of different forms. While cybersecurity is a whole different and much more involved conversation, as my IT director would love me to talk about cybersecurity all day long, they are related, and they should be discussed and taught early and often. Now, there are a variety of techniques that are used to obtain the data involved in stealing someone's identity, and it's important to kind of review some of these things you have on the slide here so that you're aware of where this information comes from. These techniques include things like, purchasing stolen PII over the web, or previous data breaches, and that's a big one. I mean, if all you have to do is a quick Google search of data breaches spanning back decades, and you'd be astounded at some of the data breaches that you would see on that list, above and beyond what you already know. Computer intrusions, actual cold calling of victims using impersonation scams, right? I was just having this conversation last night. I had a phone call. It was a late night phone call, to be honest with you, from my mortgage company, who wanted to give me a better rate on my mortgage. Great, I love to have that conversation. And then they immediately went into asking me about my personal information and to verify it. And that's a no-go. Right now, personally, I think that the call was probably legitimate, but I will never give someone my personal information over the phone that called me, especially if they're calling me at 10 o'clock at night. So these are the types of things that we really need to be aware of and to think twice about before giving out any of our information. Email phishing schemes, physical theft of data, right? We're talking about people going through your garbage or dumpster diving. Theft of data from public websites and social media accounts. That's a big form of data theft. And there are other methods as well. So, and I do have to say, outside of the other situation I just discussed, this is something that is very personal to me as well. And the reason why is because I myself have been a victim of identity theft a number of years ago. The way that I found out wasn't necessarily through an unemployment claim or anything that we're going through right now. How I found out is when I went on to log in onto my TurboTax to do my taxes. And to my surprise, there was a nice note right on the front page thanking me for filing my taxes 3 days prior. I definitely did not file my taxes 3 days prior, and I was sort of annoyed that I missed it by 3 days. But as it turns out, there was a major security breach with TurboTax where the bad guys were able to access my TurboTax account, and they were off and running. It's all they needed. All they had to do was change my email address, my password, and enter a new bank account, and now my tax refund was theirs. So, all in all, we did get it sorted out. It was a royal pain. We had to involve the IRS, the FBI, or local police. It took a really long time, and I now have extra steps that I need to take every single year when I do file. But the most alarming part is that the personal data from my family is out there. That was years ago, and I've kind of come to terms that my information is out there anyway, and it kind of shifts your focus to protecting your data to now protecting your data, right? You need to think about the things you need to do now that your data is out there, and it's really just being vigilant and aware of the things that you need to do and protecting yourselves through other means, which I'm going to get to in just a minute. So, what I'd like to do now is to kind of get into this idea of unemployment fraud, right? And how are these types of unemployment claims identified? This is where we're going to get into a scenario where you as an employer can can look at things objectively, see what to look out for. How can you help yourself protect your data? How can you help your employee, and how the employee can help themselves? And over the next couple of slides, we're going to kind of take everybody through that. So most employers actually become aware of fraudulent unemployment claims by receiving a claim notice from a state unemployment agency for an employer who continues to be employed, right? That's the red flag. I have an unemployment notice, but John Smith is right there. I see him. He works every day. This seems odd. So that's your first red flag. Now, many victims, on the other side, many victims of identity theft related to unemployment insurance don't necessarily even know they've been targeted unless a couple of things happen, right? And these are when they try to file a claim for unemployment and for themselves, and they were rejected because there's already a claim open out there. Or they will actually receive a notification from the state. When you do file for unemployment, even if you didn't file it, you will eventually get a notice from the state regarding it. And if you didn't file for that unemployment, that's a pretty good indication that someone did it for you. Or you can receive a notice that you failed the security verification process for your unemployment claim, kind of similar to the first two, but then the other one. And this is where employers come into play. Employees will a lot of times be first notified when they get notified from their employer that they received a claim or that a claim was filed, and obviously that they're still working. So next is kind of we talk about who's at risk, right? And here's the big one. Those who have already been a victim of identity theft. You can't see me, but I'm raising my hand. That's me. My information's out there. And then we have those who have had their PIIs, such as their name, date of birth, address, social security number, exposed in the past breach. Again, similar to the first one, my data's out there. So I'm at a heightened risk myself. And then we have those unique situations where people give their personally identifiable information to an individual claiming to be facilitating or assisting the filing of the unemployment insurance, often for a fee. That doesn't happen, and that should definitely be a red flag as well. So, but for the most part, it's really, if your information's out there, whether it's voluntary or involuntary, you are at a heightened risk. So what can employers do? This is important. This is really where we get down to the nuts and bolts of the steps and the processes from an employer and an employee side. Now that we've learned what identity theft is and kind of what to look out for and who's at risk, let's talk about what we can do. First and foremost, and I've said it a lot, employers need to be hyper vigilant in this process. Right? Notify your workforce, inform employees about the prevalence of these types of scams, inform them of the fact that individuals who have been previously subjected to identity theft are more susceptible in these situations, and give them ideas and steps on how to educate them on how to protect their personal information. All right? Then employers also need to be prepared. Yes, I know it's the Boy Scouts model, and it's a good one, but it's true. HR professionals should be on their toes. They need to be alert and review any notices that they get from the state unemployment agencies with heightened security. Employers do tend to be the first to learn of these scams, as we've talked about, when an unemployment notice is received regarding an existing employee. That is the biggest red flag, and that's when the questions should start. And again, as I've discussed, right now, what we're seeing is that higher level employees, C-level, CEOs, executives, high wage earners, these are the ones that are being targeted right now. So it's, again, important to be very, very sensitive to this process. And the only real weapon that we have to wage against this war and the fraud itself is our own due diligence. So, upon the receipt of a fraudulent unemployment claim, these are the following steps that the employer should be taking. So the first is going to be confirm the employee's status. This one really may be obvious, but upon receipt of a claim for unemployment, an employer should first confirm whether the employee is still working at that time. If the employee is still working for the employer, then they should ask the employee whether or not they filed a claim. Because working employees can be eligible for unemployment, so it's not necessarily a game stopper. But the first thing should always be to communicate with to confirm the employee's status with the employee itself. Then we want to follow the applicable procedures to dispute that claim. If the employee did not file that claim, the employer should follow instructions on the form to dispute that claim. Instances of these could include returning the form with a notification that the employee remains employed. There's usually some type of guide or instruction on the form to dispute the claim. All right. Using Prestige as the example from the employer side, every fraudulent claim that we come across is immediately disputed and notified with the state. So that process is always going to happen, and from the employer side, that's what you should do as well. If you work with an administrator, for your unemployment, I would say to loop them in because they probably have a process on their own as well. And then getting back to communicating with the employee. The employer is going to want, you as the employer, you're going to want to alert the employee that you received a fraudulent claim in the employee's name. At that point, you can then take steps to provide recommendations on, what the employee can do to secure their identity, including filing identity theft reports with the FTC or reviewing their credit report. Those are certain things that they can do. All right. Then we want to maintain records. As an HR professional, that is music to my ears and something that we guide on often. As the employer, you should always maintain copies of all communications with the state unemployment agencies and save those to the employee's file. Then we want to monitor the unemployment claims. If a process isn't in place for you as an organization, you should really consider establishing a process to monitor unemployment claims. And that's something that we can help you out here at Prestige to put that in place, but it's always a good process to follow. And then finally, on this slide, again, notify the state. When you confirm you do have a fraudulent claim, you should always go to that State Department. A lot of state departments have online options right now. As we mentioned, getting them on the phone is going to be a challenge because of, frankly, how busy they are. But there are usually steps. I can speak from a lot of different states' perspective where you can go online, very easily have the employee fill out certain information, and that usually fills that requirement. So we're going to move on to our last slide here on this section, and this really revolves around what employees can do. And this is what you can do when you come across these situations to help guide your employees in a right way, because it is a very stressful, frustrating part. One is just kind of wrap your head around the fact that you've been a victim of identity theft, and that can be tough as well. But then you need to figure out what exactly to do. So the first steps that employees should really take is to report any notices to the state, right? We're seeing a common thread. Report any notices to the state. Employees who do receive a notice from the state regarding an unemployment claim that they did not file should not only go to the state, but obviously notify your HR department as well, and they can help you out. Victims should also contact the 3 major credit bureaus to place a fraud alert on their credit records. So we're talking about Experian, TransUnion, and Equifax. It may not, or it's not going to prevent the fraud that actually got you there in the first place, but it will help you in the future with any future attacks. Additionally, they're going to want to notify the IRS by filling out an identity theft affidavit. I've been there myself, as we've been through, and this can easily be guided through visiting the irs.gov website or identitytheft.gov website. Also, very important to monitor your personal accounts. Employees should definitely keep an eye on their bank accounts, their credit card accounts, reach out to them. Definitely change your passwords, and I'm not just talking about social media. A lot of people pay bills online, and it's a practice that you're going to want to go on and frankly, change all of them. And if you're anything like me, you have quite a few of very long, very different passwords, but it is a very important step into protecting your data. Also ensure that your documents are properly stored and deleted, of course, if necessary. I'm sure everybody has a ton of documents, whether they're tax forms or the like. on paper, in their house, in their office. All these forms obtain so much of your personal information. If you don't need them, store them, shred them, get rid of them. Don't just toss them in the garbage. You're going to want to rip them up in some form. You know, it's unfortunate that we have to act this way these days, but believe me, it'll help. And then we have phishing and smishing, right? These employees should definitely be aware of these types of targeted methods to access their personal information through their phone numbers, through their email accounts. These are very prevalent these days in getting this information. So those are the areas that employees can really help themselves. You know, where can an employee report unemployment insurance fraud? Very simply, the U.S. Department of Labor has a page that lists a link for every single state on where they can go and what they need to do to report their unemployment fraud. You know, you can also visit your specific state Department of Labor for specific instructions. But we've been there, we've reviewed it. It's a very simple process to take. And then lastly, just to kind of touch on these things before I wrap up and hand things over to Carol, but really understand how to protect yourself from fraud. And what this is, aside from just saying, hey, be smart, but don't share your information with anybody that you don't know. Heck, don't share it with people you do know. You know, there's just so many ways for people to get your information. You don't want to make it easy for them. Also, follow good computer hygiene, cybersecurity practices. As an organization, as employers, I urge you to set up trainings for your employees. You know, here at Prestige, we go through regular trainings on cybersecurity, and I can tell you it works. It works. It puts the thought in their mind and makes them question everything, and that's really what we need to do these days. And then, of course, take advantage of credit monitoring services if you can. They can truly help you out and protect you moving forward. But that's really where we are from an employment insurance fraud perspective. I hope that what I was able to bring you today during this section was to help you out, make you become more aware. But also, if you do have any questions, don't hesitate to reach out to us at Prestige at any point in time so that we can help you out. All right. So with that said, I am going to turn the keys to the car over to Carol Sawyer so that she can go over some other exciting news around the Employee Retention Tax Credit and the Paycheck Protection Program. Carol, it's all yours.
Well, thank you very much, Jason, and it's a pleasure to be back with all of you again today as we talk about legislation. This topic has come up again because of the legislation in the Continuing Appropriations Act. So let's have a little bit of history first before we get into the changes. Employee Retention Tax Credit was part of the CARES Act, which was passed back on March 27th of 2020 at the beginning of the pandemic. And it had this new Employee Retention Tax Credit in it. And the purpose of this tax credit is in the title. It's a way to help you retain your employees. Both this and the Paycheck Protection Program were meant to put money in the pockets of American workers. So this is a tax credit against your payroll taxes. Now, for most of you as a business, you think of the payroll taxes of the FICA and Medicare, the Social Security and Medicare taxes that you need to match what's come out of your employees' checks. It's actually much bigger than that because you get to withhold and take a credit against all of the withholdings from that person's check. So if at the end of a payroll, if you have, a $5,000 payroll run, and of that, there's $900 of tax withholding, another $900 of FICA and Medicare, including your match, that's $1,800. The tax credit applies to that full $1,800. So it just reduces your debt to the IRS and a credit against those taxes, and that can help you with cash flow immediately. Now, as I said, this is not a deferral of taxes. So it's different than that FICA deferral that a great many of you participated in 2020. This is a credit, and it is refundable. There are many tax credits in the IRS world that have carry forwards. If you can't absorb the full credit in a certain year, you have to carry it forward. This is fully refundable, meaning that you get the benefit right away. The Continuing Appropriations Act made two changes, both retroactive to 2020 and prospective for 2021. I do want to point out, and I mentioned this on a couple of slides, because 2020 has now, fiscal year 2020 has now ended. Any wages used to calculate this credit are not deductible on the business return to the extent of the credit. So if you had $10,000 in wages and $5,000 in credit, you're only allowed to deduct $5,000 in wages. That is something you will need to discuss with your CPA, with the accounting firm that handles your business return, to make them aware that you have received this credit. On to the next slide, once again, is an overview of the 2020 rules prior to the changes by the Continuing Appropriations Act. The ERTC is a credit equal to 50% of the qualified wages, which we will continue to discuss further on down what qualified wages are. The cap was an annual cap for 2020, so it was capped at $10,000 per year. So one employee, you could get up to a $5,000 tax credit. Who's eligible for this? Well, during 2020, in the original legislation, first of all, any business that had their operations fully or partially suspended. Number one example, restaurants, all of the entertainment business, they were shut down. They had to stop. So they qualified under this. The second qualification was if you had a decline of gross receipts of more than 50%, quarter over quarter between 2020 and 2019. That qualified you for the credit. That does get a little bit complicated in terms because the test is applied for each quarter and then determines which quarters you are eligible for, which I'll get more in depth to in a later slide. There was a differentiation in terms of what is qualified wages based on the size of the employer. So for employers with 100 or fewer full-time employees, all wages were considered qualified wages. The full-time count here is not the full-time equivalent that we've been talking about since that time as it applies to PPP loans. This is the full-time employee calculation that was outlined a number of years ago in the Affordable Care Act to determine large employers that had different reporting rules. It is a simpler calculation than the FTE. For employers with between 100 and 500 full-time employees, qualified wages were wages paid to employees that were not working. In other words, since you could get a tax credit, you could pay an employee for not working and get that tax credit. I really didn't see anybody take advantage of this type of credit, but it was there. And once again, it was because the Congress was doing their best to get money in the pockets of unemployed Americans. Now, a part of the CARES Act, any business that received a PPP loan was automatically not eligible for the ERTC. The credit calculation also did include the properly allocable qualified health plan expenses associated with those wages. So if the employer is making a contribution to the employee's healthcare expense, those were taken into account as well. With the $10,000 annual cap, most of our employers, businesses that did receive this credit in 2020 didn't need that additional calculation. They were able to easily reach the wage cap just using wages to get to that $10,000. And again, I want to point out, the wages are not fully deductible on your business tax return up to the extent of the tax credit that you received. This is very similar to other payroll type tax credits. For those of you in the restaurant business, there is a FICA tip credit, and it acts the same way. So again, just if you do get this credit, let your accountants know before they file your business return. So now we move on to the next slide that gives us what really the single retroactive change to the ERTC, and that is that businesses that received a PPP loan can now claim the credit on wages that were not paid with loan proceeds. This can get a little complicated because when they expanded the covered period from 8 weeks to 24 weeks, I know many of our clients used a 24-week period, which is 6 months at that point, slightly under 6 months, and covered a great part of 2020. So there aren't as many wages outside of that covered period in quarters where you also have, that you qualify, that you have that 50% reduction in gross receipts, or you were partially or fully shut down during that quarter. So the unanswered question is, can you calculate the credit on the wages included in your covered period and your forgiveness application that weren't needed to get forgiveness? So there are, unfortunately, many more questions than there are answers in terms of this retroactive credit. Also because the credit is claimed on the 941. And all of the 941s for all 4 quarters of 2020 have already been filed. So originally the thought is the way to claim this retroactive credit is to file an amended 941. But that could potentially mean amending all 3 quarters, Q2, Q3, and Q4, depending on when the business qualified. And 941s for PEOs are multi-page documents as we list every EIN and give essentially a mock-up of what the 941 would look for each of those EINs should they file their own. This is a huge lift for IRS to process all of these amended 941s if that's the route they decide to go. We are hopeful to get either the IRS to accept a change to their policy or something written into the legislation in the most recent package that will hopefully be passed soon to allow us to take those credits on the current 2021 941 instead of amending a prior quarter. So at this point, we're not moving forward with these retroactive credits for 2020 until we get some concrete guidance from the IRS or from Congress on how they would like us to proceed. When we do get to that time, we will share a little more information with you with the intricacies of calculating what wages in 2020 would be eligible based on the requirements with gross receipts and also your PPP loan applications. So that wraps up the retroactive changes. So let's look forward to our prospective changes for 2021. The CAA extended this tax credit through June 30th of 2021. And they expanded it. It is now a 70% tax credit of qualified wages and group health plan expenses. So instead of $5,000 per employee, you're now having the option of $7,000 per employee. And that $10,000 cap is now quarterly, not yearly. So the clock resets on April 1st, 2021 to start earning that credit all over again. So ideally, your potential credit for all of 2021 is $14,000 per employee. That is a large credit and a large effort on Congress's they want to put money back in the pockets of workers and businesses to survive the pandemic and the economic downturn that has continued to occur. They did change the gross receipts test to make it a little bit easier. You now only need to show a 20% decline. That's a little easier for businesses to show. Not many had a full 50%. 20%, I think, may describe most businesses across America. The qualification for a government-ordered suspension, that remains unchanged, and you still have a lot of industries, once again, I'll say restaurants, that are here in New York City are only open of 25% of capacity. So they are still under a shutdown. It also allows the option of using the immediately preceding quarter for determining eligibility. Q1 2021. None of us know what our gross receipts are going to be when the quarter ends. And we want to take advantage of that tax credit as the quarter goes on. So the legislation said use Q4. You can look at Q4 2020 over Q4 2019. And if there's a more than a 20% reduction, you qualify for the tax credit. And then that will continue for Q2. If you have that reduction in Q1, you qualify for Q2. And that also takes into account that as restrictions ease, business will start to rebound. So you may not have a 20% reduction in Q2, but you can qualify because of the reduction you had in Q1. So how do you claim the credit? What do you, as a client of Prestige PEO, need to do? Contact your payroll specialist and ask for our attestation form. It's a simple form, a couple of boxes to check saying that you want to claim the credit, that if you are getting a second draw PPP loan, that'll come up in a forthcoming slide here, that you will not use the same wages. We're also keeping track in-house. Once you receive that PPP second draw, we turn off the tax credit and then send it back to us. Now, a lot of you have been, you're worried, you're thinking about it. Should we apply for this? I do need to let you know that the deadline for claiming the credit for Q1 here at Prestige is Friday, March 26th. That still allows us ample time to calculate the credit, give you the credit, and also reduce our deposit with the IRS so that we have received the money back essentially from the IRS that we have given to you. If you elect the credit for Q1 after that date, it will most likely end up being processed as a refund on our 941, and you will have to wait until that is processed by the IRS and we actually receive that money back. I do help with some bookkeeping with another outside company that has two of these credits on their Q2 and Q3 941s from 2020. They still don't have their checks yet. So the IRS is very delayed in processing these refunds on the 941 when they're generated. So please, if you qualify, let us know, get that signed form in. We can get the tax credit calculated and included in our 941 filing as we do the timely filing. Now, the next slide goes into a little bit of the gross receipts test and how complicated this will be when we start calculating for 2020. The chart clearly shows you that for 2020, you're only allowed to use current quarter gross receipts. So that's what we will look at. There is no alternative as there is for 2021. On to the next slide, we talk about an example a little bit. And we have a company that had a 50% reduction in gross receipts for just Q2 in 2020. And then in Q3, they rebounded and they only had like a 15% reduction in Q3. Well, what quarters are they eligible for? They would be eligible for Q2 and Q3 because you are eligible in the quarter where it rebounded, but you would not be eligible in Q4 because that rebound has occurred you are considered to be recovered and therefore not eligible for the credit, even if you then had another dip in Q4. I do want to remind everyone that as much as the credit for 2020 is retroactive, it is still that 50%, more than 50% decline in gross receipts, which can be a large bar for a lot of companies to meet. You can be struggling and not have a 50% reduction. This is particularly problematic because most PPP borrowers got their money early in Q2 and it covered their expenses in Q2 and Q3. So it will be a tricky calculation when the time comes to review eligibility for 2020. So that ends our wonderful retention tax credit conversation. And we're now going to go and discuss the PPP loan second draw qualifications. The Continuing Appropriations Act added to the PPP loan program. First of all, it opened up the window again for first-time borrowers. So someone who did not apply last year has the option of applying again this year. But then those that did get a loan last year have an option at a second loan, a second draw. The qualifications for that is that you have no more than 300 employees per physical location. The business has used or will use all of your first loan, so you can't leave anything unspent on that and qualify for a second one. Although at least I know here at Prestige, the majority of our clients have ended their covered period and have truly spent all of their money. And there is a gross receipts test for this as well. You will need to document a 25% reduction in gross receipts for at least one quarter in 2020 as compared to another quarter in 2019. There is the option if you can meet that test for the entire year, 2020 over 2019, that is an option. But otherwise, you would need to pick one quarter to show that reduction. Depending on the size of the loan that you're applying for, you may have to document that at the time of application or when you apply for forgiveness. The threshold for that is $150,000. If your loan is less than that, you will be able to process the application without documenting. But when it comes to forgiveness, you will need to include that documentation. And also please remember that you are checking the box in an attestation on your application saying that economic uncertainty requires this loan for you to keep going. That is still on the application as it was last year. So what documents do you need to get from Prestige? We can go to the next slide, Jason. I might have a time delay. To apply for your second loan. There we are. The first is we have that loan application report that took all of your wages, your benefits that you paid for employees, your taxes, your 401k contributions, and calculated your average monthly payroll cost for 2019. That's the report we had last year that you could use to apply for your loan. And that report, since it's printed on Prestige letterhead and is therefore considered a report from a third-party payroll processing company that the banks are allowed to rely on as per SBA instructions, was all that you needed for the most part to apply for your PPP loan. We do have another one of those reports now for 2020. Since you're allowed to pick whichever year you want. I realize you want to maximize your loan amount in some ways, but remember, you will need to spend this loan to get forgiveness, so choose wisely between the 2 years. All of the other regulations are the same, the 60-40 split. There is an expansion of the what is eligible for the other costs that outside of payroll. It includes a number of other costs that businesses need to run, one of them being cloud software, whether it's accounting, timekeeping, those types of things. Please remember, though, this loan, the Paycheck Protection Loan, the purpose of it is to get money into the pockets of the American workers. So if you focus on payroll costs for both the application and the forgiveness of this, you're following the true spirit of the legislation. Now, we do have some banks that are asking for 941, which, as you know, as a client of a PEO, we don't have 941s. The 941s is for the entire PEO. Again, we have that client allocation report that comes on Prestige letterhead. We can run it for you for the entire year. We can run it for you on a quarterly basis to mimic the 941. So, and again, it's a report that SBA has told banks that they are allowed to rely on in lieu of the 941 or the state quarterly unemployment returns, which are kind of an equivalent. I've also seen some banks asking for further evidence of employer contributions for retirement and group health plans outside of our loan application report. This is a separate report for both the retirement and group health plans that your payroll specialist can run for you, once again, for either 2019 or 2020, to give a summary of the costs by employee of what you have paid. And there is a new requirement, proof that you were in business on February 15th, 2019. Again, ask your specialist to run you the client allocation report for just February 2019. That shows that you had payroll for that point of time and that you are eligible to apply for the loan for that requirement. The last line talks about documents that the bank may ask for that don't come from Prestige. Partnerships may need to include a copy of your 1065-K1s, I apologize for the typo, for proof of partner compensation. Partner compensation is an eligible expense, slightly different thresholds than non-owner employees, but nonetheless eligible, so you may need to provide that. As I mentioned earlier, the documentation to support your 25% reduction in gross receipts. This may not be an easy thing to do. We recently heard from a client this morning that their loan was specifically rejected for lack of proof. Unfortunately, that is not something Prestige can help you with. You will need to work with your own business accountants for that proof for the bank. And then again, a reminder, which I'd already brought up, forgetting that it was actually on a slide, is the reminder that there is that attestation that the economic uncertainty makes this loan request necessary. Remember that last year, and I'm sure it's still in play this year, loans of more than $2 million will be audited by the SBA. I haven't heard that there are any other pending audit amounts or things, but the Congress and the SBA is looking at these closely to make sure these loans are truly helping the businesses and the employees that need it. And Jason, that is all I have for today.
Thank you very much, Carol. Really interesting stuff on the employee retention tax credit, as well as the Paycheck Protection Program. I know a lot of questions have been coming in around these areas. So, Carol, your involvement in this is super important, and we do thank you for speaking with everyone today. For everyone else on the call, thank you so much for taking some time of your Wednesday morning to join us. You know, as per normal, please be on the lookout for the Prestige Insights newsletter that has a lot of the information that we talk about here in the webinars, as well as other pertinent information out there that could be useful to you as employers. Please take a look at that, as well as, you know, visit our website that has all of these resources and information, as well as this very own webinar logged there as well. We are always here to help out. Please reach out to your Prestige specialists, and I hope everybody here has a fantastic rest of the week. We'll see you next time.